Yeah. That's what we want. Okay, here we go. Good, okay. Welcome, you're listening to the Best of Investing on News Talk 910. You know our show. It's where we present valuable information about real estate, the financial markets, and other economic business of the day. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, Robert Schiff of RPM Mortgage, and Lou Botwall of Linsco Private Ledger. And our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. Check them out. You can reach them at 916-777-5511. And today's trivia theme, drum roll, is injuries in sports. That'll be kind of fun.
Yeah.
A little hurtful, but that's okay. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also on television, Comcast Channel 26 on Saturdays at noon. And if you're listening to the radio, you've just missed an hour's worth of TV of us. And Sundays at 6 p.m. you can catch us there. Reminder again, World Wraps in Corte Madera and Santa Clara is giving our listeners a free smoothie with purchase of a wrapper bowl. If you mention the Best of Investing, go there for lunch today. Best wraps in town. And today, Lou, why don't you start us off with what's going on in the stock market?
Well, I wanted to dig in real quick because we've hit the July time frame where we kind of take a deep breath and measure what's happened this year so far in the marketplace. Specifically, what the returns have been and really where we're headed. It's an election year, which is always a fun year because in the end, we kind of hit a pause button between now and November, trying to figure out what's going to happen. There is a fiscal cliff we'll talk about coming up, but I want to comment on a few quick things. One is, if you look at just the S&P 500 this year, we're up close to 9%, 8.9%, 6% as of June 30th of this year, which is a real nice return. I take that any day, any week, any month of the year. It's actually been a really good start to the year. We kind of had that very bad August last year, remember, where we were arguing over the debt ceiling and all those things, and from that point forward, things really moved ahead with the August time frame going to September, October, but really ramped up December, January, February, March. March we kind of peaked. We've come down since then. So
what happened since June 30th?
June 30th is the mark of the 6 months.
Yeah, no, I know what that is.
Yeah.
Yeah, like I said, I've always had 6 years of high school. So, okay, no, what I meant was from June, let's say July 1st to now. I know the market's up quite a bit. Yeah. Well, no, I'm just wondering, how's the market done just in July so far?
In July so far, it's well, as of this week, it's about flat for the month of July.
Oh, okay, because we had some 6 down sessions. But,
right, we're up today. We're up. Should I say this week? On Friday, we hit about a 200-point upturn during intraday trading. The market's probably going to close, I think, between 130, 170 today. So.
Now, it used to be in the old days that the market was about 18 months ahead of the economy. But I don't think everything's changed. I mean,
was it that long?
Yeah, about 60 in the 60s and 70s and 80s and 90s and
now it's about 5 minutes ahead.
Well, it changes so much.
Yeah.
It's a futures game. Everyone's trying to price where things are going. We got some good news and bad news every single week. Unemployment came out last week, which was very negative. Consumer sentiment came out this week, which is not very positive. And the reason why people are not feeling good right now is because we're up almost 12% for the year in March, and we dropped about 2.5%. So that March to June 30th time frame was very negative.
Okay, well remember, this is the happy show, so we only like to hear good news. keep the bad news to yourself.
What's the good news for stock investors?
The good news is everyone's still getting paid dividends, and the rate of return on dividend-paying stocks has been quite high.
And it's still in dollars.
It's still in dollars. Well, I mean, that stretches another question, which is, what's going on over in Europe and China. China this week was in a real crosshairs of everyone talking about their GDP report, which was not very positive. And if it's kind of this trickle-down effect, that's what we have to remember now, is that we are interdependent like we were 20 years ago, like you mentioned. And, if China's not buying stuff from Germany, and Germany's not buying stuff from us, and we're not buying stuff from China, it kind of circulates around the globe, and you kind of have this general slowdown.
That's why they want the Olympic clothes from China.
Exactly.
Well, it's like when you buy a Toyota, it's not a Japanese car anymore 100%. I mean, it's,
Right.
I don't know how-
Tennessee, yeah.
Yeah, a lot of it's American
China.
made.
Yeah, no,
And
you
China,
know, that's,
obviously.
hopefully we can build up some more manufacturing, because really what we are right now is a service and consumer economy. And many say those are the stocks to hold through this election period. I had one interesting thing I wanted to throw out there about the Wall Street election poll that LPL put out. This is kind of interesting because they said there's certain industries, you guys will love this, will be affected by the election one way or another. Democrats take over, Republicans take over. Who's elected president, who controls the Senate and the House. So they came back with Democrats. They favor healthcare facilities, obviously,
Of course.
food and staples, retailing, gas, utilities, healthcare services, life science tools and services, construction materials, home building, construction, and farm and machinery. Now, what's left? That's the Republican side.
Let's see, gambling casinos and.
Well,
Offshore.
this was
depressing already.
Well, it's kind of it's this counterintuitive balance between, you know, what people support, and you get this ethanol, natural gas debate, and all those things. So when you get to the Republican side, it's cold and consumable fuels, drill baby drill, diversified financial services, banks too big to fail,
Sure.
oil and gas exploration and production, oil and gas drilling. I'd probably include fracking in that as well. But you can't actually buy fracking; you can buy companies that frack. Managed healthcare, electric utilities, specialty retailers, because if taxes don't go up, you can put your money somewhere, and that's with the larger base retail chains that have a high price point. And then telecommunications and services. So what people are starting to do is trying to define where they think the economy is going based on tax policy.
Well, I don't know that I believe that. I mean, why would retail favor the Democrats? If retail is based on the economy and generally speaking, I think our Republican policies more
Fiscal.
pro-entrepreneurial, business growth, business development, business investment, hiring, all of those?
Well, that's a great point, because the real struggle right now is who's going to get the money. You always got to follow the money in the economy.
Right.
And what they're really saying, like President Barack Obama said this week, I'm not going to raise taxes on those earning under $250,000.
Woo!
So, well, the idea is that those who are spending money at Walmart, Target, or other retail chains that have a lower price point are going to be okay, versus a high-end retailer like, we think of Nordstrom's or
yeah.
Tiffany or others won't do quite as well. So
Tommy Bahama.
Tommy Bahama. Nice clothes, by the
Love
way.
their
right?
shirts, they're too expensive.
Exactly. So, the idea here is that we really need to focus on, not only the issue of who's going to be elected, Democrats or Republicans, but also the end result of this fiscal cliff, which is, how we're going to pay all this debt service off. Because it's going to be a problem possibly in November. That could be really captivating. We could have the election and then have to go through that debate we went through last August. And then almost all the tax cuts expire, and we talked about that this week. I mean, I talked to some clients and said, what if dividends are taxed at ordinary income? That's a big what if.
That's
and
a
that
possibility.
That's a possibility right now. I mean, if you go back to the Bush tax cuts, that's one of the things they lowered, which is a great thing in my opinion for especially older investors who want to clip coupons and
Sure.
get paid income stream. But boom, here we are with this. This could be ordinary income, and then everyone's like, "What do we do?
Well,
What's
it's
our
like
next
they've
step?"
always talked about trying to overhaul the tax system, where they say, well, get rid of the income tax and just have a national sales tax. But the problem with that is that you have to make it high enough to make it worthwhile, and then you're going to scrunch, quash, I guess is a better word, consumption. Yeah, because people
Right.
say, I can't afford that car. They're going to add an extra 10%.
And think of all the people that would suddenly be unemployed if you had no accountants to follow, trying to
But
tax accountants.
that's true. We don't care about the IRS auditors, I know, but all the
No,
other people.
no,
Well,
on the
here's the
other
other thing
side.
too. It's not a progressive
On the
thing,
defense
right?
side.
Right.
I mean, I guess in theory, what they could do is if you purchase, a higher priced, anything over 50,000 gets a higher. Well, here, I don't
Well,
know.
they did that with boats and cars a few years ago. Remember that?
Yeah,
The
that's
10%
right, the
tax,
luxury
luxury tax,
tax,
yeah,
yeah.
which was kind of
Yeah.
brutal. But
It was brutal.
Yeah,
Washed the industry.
It did, and VAT taxes, which they have over in Europe, are a great policy if your system already incorporated. But going from our system now into a VAT tax system could be really disruptive to many, many things.
Okay, guys, we're going to hit a quick commercial break here. Before we go to the first quick trivia question, guess what? We're going to have another special trivia contest.
that. Listen
next
and
week.
win.
Not this week, but next
Oh,
week.
next week?
Next
Okay.
week, yeah.
All right.
Okay, so get this. Experience the art of relaxation at Mount View Hotel and Spa in Napa Valley. Mount View Hotel and Spa is a green hotel celebrating 100 years of hospitality and set in the center of Calistoga's many pleasures. Contact their friendly concierge staff 24/7. Call 800-816-6877 or visit them online at www.mountviewhotel.com. And guys, I don't know if you've checked out this hotel, but go to their website at www.mountviewhotel.com. I know Robert's writing it down now.
I am too.
And,
I love
it's-
Calistoga.
Oh, it's beautiful. And tell me if that place doesn't look awesome.
All right,
Okay,
go.
we are going to go to our first commercial break. And remember, the theme is sports injuries. Here is the first trivia question. Who was the Oakland A's catcher that Pete Rose barreled over in an all-star game, separating his right shoulder? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Who was the Oakland A's catcher that Pete Rose barreled over in an all-star game, separating his right shoulder? 888-912-1190. Make sure to include your name, email address, and remember to speak slowly and spell out your email for us one letter at a time. And people are who's, not that's. So it's who was the person who Pete Rose barreled over. All right, 888-912-1190. We'll be right back.
Who dat?
Who dat?
Who dat? Who dat?
Who
dat?
that nation?
Yeah,
Who separated their shoulder?
Pete Rose
That
barreled
guy.
over, yeah.
So what?
Who separated their shoulder? Those are the catcher.
Anyone?
I
Anyone?
don't
Ray
actually
Fosse.
know that.
It's Fosse.
Ray Fosse.
Ray
Fosse.
Very
Ray
good.
Fosse.
Ray Fosse.
I think that was when Color TV was still
An
around.
all-star
That's right.
game?
All-Star game,
All-Star
1970.
game, yeah,
and he just
1970, yeah.
boom!
He never,
Pete Rose was the separator.
yeah.
Was a
Yeah,
separator,
well,
thank
he
you.
never, but he never played it, right? Fosse didn't have a career.
He played again, but
Yeah.
he didn't.
He was never the same.
Yeah.
Wow.
Yeah.
But here's an interesting trivia question. He was the first. Gosh, what was it? It had to do with the Cleveland Indians. He was like first round draft choice of the Cleveland Indians ever. It's weird. There's this weird thing about Ray Fosse that has to do with the Cleveland Indians and him being the first of something. And so I was
Wow.
like, you gotta be kidding me, because that was like 1960 something, not way back.
I'm gonna Google that Mount View Hotel.
Yeah,
Yeah,
it's
yeah.
it's rather it's really
Is
great.
that
for
you
hosts,
have
is
your
that
wife
for,
calling in for the,
It's for me.
Yeah.
Hold your foot still.
Oh yes.
Hold it still.
Sorry. There you
Yeah,
go.
you got your-
so when you say 9% and 12%, is that annualized?
that's
Remember,
just
it's too
from
hot to
January
sweat.
1st through June
Wow.
30th.
That's-
Yeah.
I didn't realize that.
Just wait,
I
Patrick.
just
Oh,
assumed it was
yeah.
flat or maybe even down from all the crappy news I was hearing the last several, not
No, it
the
was-
last couple weeks ago.
Yeah, no, January, February, March, we rocket shipped really up, and then coming out of August, and then,
remember that,
and
yeah.
then, but people
second
don't.
quarter
Yeah,
was
second
really
quarter was
bad.
really bad, and that's, people are positioning themselves in the third and fourth quarter. What do I do now?
July,
That's the
what's
question.
today? July
13th.
Friday the 13th.
It's the 14th.
The 14th?
14th.
Yeah.
It's Saturday. Be very quiet. It's the 14th. We are hunting rabbits.
So do we have specials at the Mount View Hotel? Or,
If you answer the question.
If you,
Lighthouse
Say
4 or
say
5.
the magic word, and
Where's
the
it-
bird,
where's-
you'll come down.
Employee-
When's our
or
employee
members?
retreat at the Lighthouse?
yeah,
Conference?
hey, let me know. Let's see here. I can arrange it.
That can be arranged.
I can, yeah,
Oh, I
so
really
it's gonna
do
be
need to.
arranged.
although I think
Ah, that would hurt more than. Look at all that. That's crazy.
Oh, gross.
Yeah. I should have showed it to the audience. there.
Oh, yeah, that would not have been good.
No.
So I always think in an election, your markets don't like uncertainty.
That's right.
Right.
Really in a period where, look at the polls, there's really uncertain, and
Yeah.
the differences are huger than they, even last time Obama
Huger?
against.
Right.
Huger.
Yeah, the
Like
large-
me.
Who's your little hooger?
My company.
People are nuts, not you.
The person who's supposed to talk to you about approving this wasn't there, but this is so if you take the Democrats, it says here, you take the Democrats and divide it by the Republican companies, what the market's telling you right now is Barack Obama is starting to gain momentum. It's fallen off a little bit. This is from July 5th. So, and apparently these attack ads he has, like Bain Capital, outsourcing stuff to India and everything's really, hit a hard.
I've
Yes,
never been
we-
impressed with Romney. I mean, if he doesn't win, I'm not gonna curl up and cry, but it just is really a bummer to think that Obama's gonna waltz into a second
I'm hoping
term.
Alan
Doesn't
Keyes runs
deserve.
again.
Yeah.
I like Alan Keyes.
I
you
like
know?
the 999.
Yeah.
The
Oh,
999,
yeah, Godfather's
the pizza
Pizza.
guy.
Yeah.
Oh, he was
Yeah,
great.
he was with the hat like Willie Brown.
Yeah,
999.
yeah.
Well,
But he was for a VAT tax, right? Wasn't that 9% of VAT tax?
999,
Yeah,
yeah, flat tax.
Well, that's what the, I've said this before, but back in 2008.
What about that woman who sexually says you sexually harassed her? 999.
Yeah.
That was his answer.
Everything.
Which one?
Yeah. Which one?
No, but back in 2008, you know, people said, did you vote for Obama? And I said, no. And they go, what are you racist? I go, no, I voted for the other black guy, Alan Keyes.
Right.
Yeah, he represented more like what
I actually did vote for Obama in the last election.
And are you happy?
No.
I-
I was hoping for change, and
Yeah, that's what the
he
whole
didn't
thing-
bring it. He just morphed into, you know.
I think
Yeah.
the economy was such
Politician.
a. I don't think McCain could. I don't think anyone could have done anything about the economy.
No, I don't think.
No, I think
don't
he was
we
out
can
when he
do
said, I came in here and the car was in the ditch and I was trying to get it back up on the road and nobody was helping.
Yeah, but you
Yeah.
know, his whole
That's
thing
a-
was the
that's a
healthcare
good
thing.
visual
I mean,
thing.
To pass
Yeah.
the biggest tax increase in the history of mankind,
Well-
that healthcare thing, I just don't think it was right.
Is it a tax increase? I mean.
What can I do for you, sir?
Massive tax increase.
Yeah, I don't know.
Yeah, no, it's-
Well, I hope it
Still
isn't,
roll-
but
still-
it's just-
still rolling?
That 3.5%
Rolling.
thing.
Remember
that's
John
wrong,
Belushi
right?
and,
That
uh,
is
Yeah,
wrong.
Animal
the
Health?
whole thing, I
Shit.
mean, they say, job creating tax.
I'm bringing egg next
Tax
time.
cuts
Yeah,
created
bottle.
jobs. We'd have all those jobs because we had the tax cuts in the last 4
Yeah,
years.
that's true.
People are so generous
So
after they own
it's
their
all
home.
just
They're just
slogans.
so
that
generous.
go
Generous what?
on.
It's all
After they own their
slightly
It's
home.
all has
After they own their home.
reality.
I'm always
Very
generous
true.
with everyone else's
And
money.
Yeah, exactly.
All right, let's go.
Okay, so, do you wanna just shoot right into email time?
Keep going.
Yeah, let's
Yeah, let's
keep
keep
going. Yeah,
going.
right.
Let's
This
go.
is segment
See
2.
where
We'll
it
do it.
goes.
Yeah, that's good.
Oh, great.
Uh-oh.
Uh-oh.
Can I go in, you guys want to hop on LIBOR a little bit?
Yeah, let's
JP
do it.
Morgan, yeah? I know, because I know you guys are experts in the
I hopped
industry.
on LIBOR shit.
Hey,
Wow.
the camera's still running.
Sorry,
Yes, we're not on cable right now, are we?
Yeah,
Can
around
we
our-
say-
around
can we
our
edit that
necks.
out, please?
Thank God we're not live.
Can we say groin injury in the cable or no?
Groin injury?
Groin injury, is that legal?
Yeah, sure.
Grain injury?
Okay, you guys ready?
You can even say ass hat as far as
Armstrong Getty.
I know, Armstrong.
I took too much Cialis, now I have a groin injury, what?
I'm talking about ass hat. I'm trying to think of what that's like.
I have no idea. I guess it's like, you know,
It's like ASCAP.
the word that that is DB that I won't use because we're being filmed. It's just a nicer, softer, easier way of saying the guy's a DB, guy's an ass
I don't get it.
hat. Something bag.
Douchebag.
Oh, there we go.
Oh.
I thought it was dumb broad. I mean, the guy. Okay.
You gotta hang around the silver.
You're gonna have to
case.
do a lot of editing this time. I'm sorry, but that's the way things
He
go.
doesn't have any tape anyhow.
Yeah, okay, that
They play
helps.
commercials on
No,
the channel?
No,
This is-
this goes
this-
straight through. Well, no, he edits things out.
This is live right to Comcast.
Yeah.
Hi, Mom.
Yeah, right to the White House. Okay.
That's right. Mom was grinding his teeth right now. Watching it.
Okay.
Those
Anyway,
are greats.
here we go, guys. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hoff, Robert Schitt, and Lou Botwall.
The gang's all here.
The gang's all here. Okay, when we cut to the first commercial break, we asked this trivia question, and again, the theme is injuries in sports. Who was the Oakland A's catcher Pete Rose barreled over in the All-Star game, separating his right shoulder? And a little hint, that was 1970, I believe. Lou, you knew the answer.
I think it was Ray Fosse.
It is Ray Fosse. That is correct.
I think it was the first colorized All-Star game, if I'm not mistaken.
Oh, was it really?
I think, yeah,
1970?
pretty close,
There's
yeah.
some useless trivia.
Yeah, totally useless.
Okay, Lou, you were going to get into some information that was interesting about LIBOR.
Well, you know, the last couple of weeks we've been berated with lots of different information. The index is coming out, the Fed speak, and all those things. But two huge issues have really affected the market. The main thing being this LIBOR scandal that we're just starting to understand. And I know people here talk a lot about real estate, work in the mortgage industry, so everyone needs to chime in. But this is heresy as far as I'm concerned. This is the
So
worst.
what actually
They
happened?
changed the spelling from LIBOR to
Yeah.
LIEBOR.
LIBOR.
Well, I mean, these guys. I mean, as you guys know, the Fed sets the Fed funds rate,
Right.
and over there, LIBOR is set by the interbank rate, and they actually discuss about how much they were going to charge each other and trying to help each other's out. Each banker was calling each other. They have emails tracking back, like, what should we sit at this week? Especially during 2008, there's a lot of this going on because everyone was so nervous.
Lou, I'm sure it's all on the up and up. Come on.
They were just checking.
Just checking, yeah.
That's right.
Fact checking. So, I mean,
They call that price fixing? Anyway,
well, I think it's interest rate fixing, and in the end, there's so many things that are impacted by LIBOR. I think we know every single day.
Loans, yeah, a lot of loans.
Credit cards, everyone likes that rate because it's the most nimble of all the rates. It's not really set by anybody.
Wait, so if I have a loan that's based on LIBOR, do I have any recourse to anybody on anything? I wonder.
We don't know yet. We're
Uh,
researching.
I mean, I know-
Well, Lou,
I
you said
don't think
everyone-
so, although I saw in the news this morning, the mayor of Baltimore is
Right.
going to file a lawsuit because she said they had money in accounts and the interest rate was based on the LIBOR, and she figured if it wasn't fixed, they would have earned more money
Right.
in Baltimore.
Well, okay, then as a borrower, I don't wanna hear that answer. I don't
So-
want them to come back to me and go, you owe more
No,
money because the
no,
LIBOR should
no,
have been
well,
higher.
Your contract is set, so your interest
Well,
rate is set.
Well, at LIBOR plus, but.
Yeah, so Lou, question on, what you mentioned that certain people like LIBOR. Is it the lenders that like LIBOR or borrowers that like
I think it's
LIBOR?
borrowers.
I think it's actually, well, it used to be borrowers, now it's lenders.
Oh,
Because when the
okay.
when the rates are going down, you want to be in LIBOR, because that would move with the market, and if people were negative about the market, the rate would go down.
The LIBOR responds to the market much more instantaneously
Yeah.
than the one-year T-bill or
Yes.
the T-bill.
Exactly. So the idea here is that, I mean, to your point, Robert, that everyone's really upset because they had interest-bearing accounts based on LIBOR, and they were keeping their rates artificially low. The agreement was, let's keep rates low to help ourselves.
Well, okay, that's why, I know,
Yeah.
that's why the borrowers like LIBOR.
Right.
Now, maybe lenders like it because it reacts faster, but borrowers liked it because it was a lower rate.
It used to be lower.
Of course,
right?
if it's LIBOR plus
But-
18%, that ain't so good.
Yes,
It's gonna-
when things turn around, it goes up
It goes- it does,
instantaneously as
right.
opposed to the T-bill, which is lagging, so.
Yeah, and then the other thing that I want to touch on real quick is that we do some work with them is JP Morgan. I mean, this trading issue is huge. I mean, we don't know exactly how big the London whale is. We just know that JP Morgan came out this week and reported earnings and said, well, the $2 billion doesn't affect our balance sheet that significantly. I think their stock was up on Friday about $2, if you can imagine, even after reporting the loss. People say it could be much higher. It could be maybe 4, 6. I think Bloomberg said today $7.5 billion. Who won? You remember these transactions, these derivative transactions are based on two parties going against each other. They called it like the Big Short in the book and all those things. Hedge funds were on the other side of this transaction, and they made it out like bandits. They basically took this money from JP Morgan like it was a
Wow.
layup. So
Oh.
it was just
Good analogy.
So if the hedge funds would have gotten slaughtered, JP Morgan would have made a lot of money.
Correct. And I mean, it's hard for people to rationalize it. I mean, we talked about this off the air a bit. What's going on when JP Morgan can play like a sports team? A sports team can win and lose and have a significant impact. Why is a bank doing that? That's our money. That's investors' money. They're supposed to lend it out. Like what's it? A Wonderful Life, right? That's bring the money in, lend it out at a higher interest rate, and make your money. That's what banks are supposed to do. But now they're under such pressure to produce good returns. They go out there and they invest money in these risky derivative products that are, bound with problems.
And it's not illegal to do it since the Glass-Steagall Act was eviscerated.
Yeah,
in the
but
Clinton
didn't you see the
administration.
remake of It's a Wonderful Life though? Because Jimmy Stewart goes there and goes, "All right, Mr. Potter, come on, Seven, let's roll the dice."
Man, what a week for news, on top of all that, we had the Penn State report that was released yesterday.
Oh,
That's all the
man.
sports stations were talking about all
Can you
day.
imagine how much it's gonna cost Penn State?
Well, if LIBOR is a problem, Penn State could be bankrupt.
I have no idea.
Yeah.
I wonder if they're gonna take the statue down.
Did you hear about Nike? Nike took down, Joe Paterno had a statue up in front of a child care center.
Oh, I know, I
Nike.
heard about that.
Oh,
And they took it
gosh,
down,
yeah.
so I heard that, I don't know if it was ESPN or someone said the other day, it was pretty scary stuff, but, yeah, I mean, the financial risk that there's people locally in the Bay Area that made a lot of money suing companies like WorldCom and those other companies that had the Enron, the malfeasance that occurred back then. This is another, side of that. They go out there and make these problems, make these rules for themselves, and that's what's really frustrating for everyone. In the end, they go, what's it going to cost us? In the end, does it cost us $5 billion? So what? Pay the penalty.
Yeah.
We made
Well,
10.
well,
Well, you
Isn't it-
said their quarterly profits are huge, even taking into account,
But that's like an Aaron Brockovich type thing, right? That
Right.
utility companies go, okay, well, I know about 50,000 people are going to die, but we're going to, so we get sued for $100 million. We made $2 billion on it, so let them die.
So what you're saying, it's been a really good week for attorneys.
Oh, it's
Always a good week for attorneys.
And what did Shakespeare say? Once you get in there, kill all the attorneys.
Nice.
There's a specific reason for that.
Wow. I can't believe you digressed that, but I mean, in the end, I still encourage everyone to, stick through the election period, stick through these dicey, returns we're seeing on like consumer price index, manufacturing indexes. Ignore all that stuff and just leave your money alone in the market for money you can afford to win or lose and stay with it.
Well, actually, Lou, we've gotten an email that seems like it's more up your line than anybody else's, so let me ask that one.
Okay.
When we eventually go to break, we come back, we'll ask the other emails we've got.
Email
that are-
time.
Yeah, we'll get into real email time, but since we're on the subject anyway, email comes in and asks, I'm concerned about the stock market, but I would like to get income. Any suggestions? So I thought, okay, well, that's right up Lou's alley.
Right, no, that's a great question. I mean, the struggle right now is what type of income will I receive and how much will it fluctuate, my original investment? If I put $10,000 in something and I'm getting a 7% income return, like you can with some oil and gas partnerships, that's great, but gas has fallen, or oil has fallen, gas has fallen over the last 6 weeks, 8 weeks. Can I stomach, I have some elderly clients, I've invested that money in oil and gas, I'm like, it's gonna go down, it's gonna go up, but you're gonna get your 7% rate of return regardless. So oil and gas is one. High dividend producing stocks, I mentioned last segment, if we get through this tax loop, this tax situation where dividends are not taxed as ordinary income, they could be a nice place to be going forward. And some of these telecoms, oil and gas companies, not the explorers or drillers, but other companies are producing between a 3 and 5% dividend on their stocks. So I think there's plenty of opportunities. Plus, there are some bonds that pay a higher interest rate. I think everyone's leaning towards tax-free bonds right now, only for the main reason that tax policy won't affect them. So they're very popular.
Do you like preferred stocks?
Preferred stocks are very good. You got to be careful. I mean, preferred stocks are like a bond
Yeah.
and a stock, and you have to just be careful where you position them in a portfolio and how liquid they are, how much trading goes on. But they can be a nice income rate of return. And the idea is they don't appreciate. I mean, people buy those, they it could appreciate as much as 7 or 10%. If it goes up that much, you can go down that much as well.
Yeah.
But I think right now, banks offer some pretty good preferred stocks. Even I'd like to see the auto companies come out with preferred stocks,
Okay.
or more of them, I should say, because their balance sheets are turning around.
Now, for the listening audience who just heard all that great information, if they wanted to get a hold of you to ask more questions, how would they get a hold of you?
Who are you and where are you?
Lou Botmal, 415-256-8970. Again, 256-8970, or you can always email a question to Louis, L-O-U-I-S, Botmal, B-A-T-M-A-L-E, @LPL.com.
Very good. Okay, we're going to cut to our second commercial break. When we come back, we've got a couple of emails for Mark and Robert that you're not going to want to miss, because I'm sure the listening audience, there are a lot of people out there who have the exact same question. So here is the second trivia question, and our theme is injuries in sports. In 1989, this Giants pitcher broke his arm while pitching due to cancer, which he eventually had to have his arm amputated. Who is he? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In 1989, this Giants pitcher broke his arm while pitching due to cancer, which he eventually had to have his arm amputated. Who is he? Call 888-912-1190. Make sure to include your name, email address, and remember to speak slowly and spell out your email for us 1 letter at a time. And we will be right back.
Excellent.
Everyone knows the answer to that one?
Dave
Dave
Becky.
So, we're talking about, as he was talking about income investments, income stocks, I was thinking, I wonder if we have a question about, that I could answer with alternative income
Right.
investments, trustee investments, as
Yeah,
opposed to going
absolutely.
to the borrower side. Maybe we stick to the investment side of things.
Right. Okay.
I know we've had some
Well, it's
emails about
investor
that.
side, he's talking about where to place your money so you get guaranteed income.
Right, exactly.
Right.
So maybe that question, we can use a question that leads into alternative investments for people who, maybe be self-directed high-res.
Okay, well, we've gotten those emails for you, so,
Yeah.
this email, do you wanna, we can push this one?
Yeah, let's push that to next week.
Okay.
And then, let's do a question.
I wonder if there's a chart showing what percentage of the investment in the stock market is institutional compared to, say, 10 years ago.
Oh, yeah, no, there's,
Must be huge.
well, they're, to your point too, they're talking about high frequency traders. That's because they have these computer programs and rhythms and, you know, call quantitative traders. And they've taken, the last 3 years, they've taken over the market. It's really scary, you know, that's, 2008 was a technical downfall. When you hit those technicals,
How about-
everything just starts selling,
how about
computers
that
take
alternative?
over. That's what they're talking about.
You guys talk
That's like the
about
uptick
trustee
rule and all those big
investments.
things that,
What
you know,
are
I think
they
should be in
and why
place.
can't I-
But I think it is more
what are
institutional.
they?
Institutions
Can I buy
are
them from
controlling
my-
more money. I mean, I was with American Funds yesterday.
my
They control,
broker,
they
from
control
my
more money than anyone else
financial-
west of the Mississippi.
What's the term?
One fund company.
Financial advisor.
My
When they
financial
buy
advisor.
Google, it's a big deal.
Financial planner.
Financial planner.
I know there was some woman, she
Yeah,
said.
we've gotten those emails, it just,
Yeah,
yeah.
Right, yeah. No, certain stocks, I mean, you actually talk to, when I got my 24 license, where your principal, they actually go into market making activity in depth and talk about how they price stocks and buyers versus sellers and the guys who have computers like this. And there's people in offices, buildings like this that trade Microsoft. Microsoft's traded like on 55 or 70 different desks. Guys are making markets in it, buying it, matching up buyers and sellers all day long. And they can be controlled by a computer. That's the problem. So computers are becoming a bigger factor. I think they're a bigger factor in gas, because gas is so important, such a big chunk of the economy. But some people cited gas today as the reason why the economy might come back in the second half, because prices have gone down 40 cents on gasoline. So it's going to be a struggle, no two ways about it. There's no silver lining. We're not going to have 4% GDPs.
No, not for a while.
No.
That's what I like. Doom and gloom, yes!
I'm not dooming or glooming.
If it leads, it leads, baby. I feel like, was it the Daily Planet, right? From
Oh, that's right.
Superman,
the
you know?
cigar
or-
chomping guy. What was his name again?
Or Spider-Man, one of those guys?
Yeah,
you know?
Spider-Man. Both Spider-Man and
Yeah.
Superman had the crabby,
Yeah.
crabby editor.
And all I care about is news. How's the sound for Robert there?
It's good.
Did you bring a makeup? I need a little makeup because I got a little.
You or
pink
Robert?
hair. What?
Are we gonna make up?
Yeah.
It's always kiss and makeup.
Kiss and makeup. There you go. You get my towel? Thank you. Ah.
Wow,
Okay.
that hit the mic.
Anyone else need makeup?
Oh, thanks, we're good.
You good?
Good.
Whoa.
Thank you.
All right.
Good. I like that.
You like that?
Good job. Thank you.
That's a blackout. Okay.
Well, I've had those once or twice.
Tell you what I'm gonna do.
At least it wasn't a 7-minute blackout.
Yeah, that's a little scary. Okay.
Dan Rather. Okay, you don't remember that?
I don't remember that.
He walked off stage, 7-minute blackout.
Oh my God.
ABC News one time or something.
Oh, yeah, that's
CBS, yeah.
right.
Just
Or
in the,
CBS,
in the,
whatever the
right,
three
right,
letters, I
right,
can't
in,
keep
right in the middle of his show,
Yeah, or at the end, or towards the end.
and he came back.
Was it a drinking blackout or just a
Cut to
blackout?
commercial.
Yeah.
Was it drinking or was it just
No, I don't remember. It was too long ago.
a brain aneurysm?
Yeah, brain fart, more like.
Brain fart. Okay. And away we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt, Robert Chip, and Lou Botmall. And when we cut to the second commercial break, we asked this trivia question. In 1989, this Giants pitcher broke his arm while pitching due to cancer, which he eventually had to have his arm amputated. Who is he?
Yeah, we all remember that
Old
one.
Dave.
Dave Dravacki, yeah, and I remember Will Clark running to the mound and,
Yeah, I
Dave
saw
was
that
like,
game.
oh man, that was sad.
I
That was really
watching
sad.
that too.
Okay, email time. Mark, we received a couple of emails for you. One was from a borrower, one was from a lender,
Let's do
or
the lender.
investor, so yeah, or investor,
Yes,
yeah.
we're talking about
lender.
investments in
Since
the
we're
last
talking about that, so
segment,
let's go
sure,
for that
sure.
one. I've heard you mention deeds of trust on the show. How come I can't buy one of those from my financial advisor? That's a good
Oh,
question.
yeah, that's a good question. So, Well, we talk a lot about deeds of trust or trust deed investing on this show. My company, Pacific Private Money, based in Novato, we're a private money lender to the real estate community, and those loans are funded by private individuals who receive a promissory note and a recorded deed of trust, so it's a secured investment, and they receive income from that note, and it's a high yielding, generally, income stream, because we make loans generally anywhere from maybe 9 to 11%, and the investor who funds that note typically gets 1 percentage point below the note rate. So if it's a 10% loan, the investor in that note oftentimes gets would get 9% for the length of the term. And these are short-term notes, generally say 12 to 24 months. And the reason why you can't buy that from your financial advisor or your broker is because these are in a class what's called alternative assets. These are investments that are not traded like stocks or preferreds or other types of investment opportunities. They're not considered highly liquid, and they're not traded publicly. These are private contracts that are made up between the borrower and the lender, the investor in the note. It's arranged by a licensed real estate broker, which Pacific Private Money is. In fact, we advertise loans to the real estate investor community. For example, we advertise to people who buy fix and flip, and people who are buying rental property, et cetera, or people who own rental property and need to pull cash out. We market to that group. They come to us, they apply for a loan, we analyze their application, we quote them a rate we think will match up with our investor appetites.
Yeah, well, let me interrupt you for a second, because one of the things, when you mentioned it's illiquid, that never really bothered me, because the loans that you do are generally no more than 3 years. So,
Right.
when
They're
people buy
short-term.
when people buy a CD for 3 years, they assume it's illiquid because they're going to hold it for that period of time.
Also, Mark, you said that they were secured, and I don't know that people got clarification that they're secured by a deed of trust or mortgage on a piece of real estate.
Right, a mortgage in California is actually referred to as a deed of trust. In the United States, there are some states that are known as mortgage states and other states that are known as deed of trust states. In California, we secure a loan on a piece of real estate by recording a deed of trust. So, so we were talking last segment about ways to invest your money for an income stream, and investing in notes secured by deeds of trust, also called trust deed investing, is one way to achieve high interest levels of income. So let's say you invested in a 10% note that paid 9% monthly. It was a 12% note. You would first of all, you get a chance to approve the borrower and the property, so you're not lending your money blindly. You get a chance to look at various loan application opportunities. We put overviews together. I mean, pretty much everybody in this business does it in a similar fashion. You look at a loan overview. If you like the overview, you ask for additional information. If it passes muster with you, you execute a funding commitment so that we know we can draw up the loan documents with your name as the lender and the borrower's name as the borrower. When the borrower has signed the loan documents, you wire your money. You or your IRA or your trust, however you're investing that money, would wire the funds to the title company, and that money does not get distributed to the lender until
To the borrower.
To the borrower, sorry, until that deed of trust is recorded. There's insurance, title insurance, a lender's title policy ensuring your lien position, meaning we generally only do first deeds of trust, first position liens on the real estate. You get hazard insurance where you're named as the lost payee in case the house burns down. So it's insured and it's secured.
Well, the thing I thought was really interesting is the interest rate. So if they're earning 9%
Oh, yeah.
and it's paid on a monthly basis, that's 0.75% per month. I mean, right now you can't even get 0.75% for a whole year.
Annually.
Yeah, annually. So in 1 month you could make the same interest you'd make in a year.
When I first got into this business, the people who were my investors were generally people who were familiar with the real estate industry, like Robert, like guys like you who were real estate agents, commercial real estate agents and residential real estate agents who saved their commissions up over the years, and they love to generally fund these loans because they understand real estate. They can very quickly analyze the property and go, oh yeah, it's a house in Marin. Of course, I'll make a loan on that. And we're only loaning generally no more than 65% of today's fair market value. so, but more and more in the last couple of years, all kinds of people have been calling us. In fact, you know, my investor list has grown considerably. I mean, it's an unbelievably large number right now of people who have contacted me saying, hey, put me on your distribution list. I'd really like to look at these funding opportunities and what that has created kind of in the private lending marketplace, particularly here in the Bay Area, is that interest rates have actually trended down a little bit. We used to loan out money at 12%, and that's kind of trended down a little bit because there's more money looking to fund those loans, and competition makes pricing go down. So now we're doing sometimes we're doing loans to individuals as low as 8 or 9%, which was unheard of in the private money or hard money lending world, say 10 years ago.
Yeah, but it's still a lot better than
Still,
what
it's
they get at the bank.
8% rather than 1/8%.
Yeah, exactly. And you're basically the bank. So people look right now and they say real estate's at a fairly low price point. So whoever's making a loan of 65% on that new price point today is in a pretty safe position.
And you
So
probably have a larger clientele, and it's going down because people realize how relatively secure that investment is compared to what it had been in the past.
Yeah, today it is a relatively secure investment. If you believe that that real estate prices have generally corrected, and they may go down a little bit in some markets in the next year or two, still, but probably not the 25 to 30 to 50% drop that some markets had experienced. And so, just to kind of come full circle with the question, trust deed investing is an alternative asset class. The only way to invest in a trust deed secured note, promissory note that would pay you, say, 8, 9, maybe even 10% monthly on your savings would be to go through a licensed real estate broker who specializes in private money lending, like Pacific Private Money.
Well, you've had a great reputation and great track record. So how do people get a hold of you?
Well, go to our website. We have a new investor website up, separate from our borrower website, so I will give you that one. That is pacificprivateinvestments.com. That's investments plural, so go to pacificprivateinvestments.com, or just call our office. We have a 415 number. We're here in the Bay Area. It's 415-883-2150. Tell us that you heard it on the Best of Investing.
You can always go to bestofinvesting.com and check Mark out there. And Robert, here's an email that we got. I know is right up your alley. How much does my FICO score affect the interest rate the bank wants to charge me? That's a great question.
Well, that is a good question. The FICO score could involve more than just the interest rate. At a certain point, it would involve not being able to get a loan.
Yeah.
So the FICO score is the first thing we look at when we're looking at a loan. And there are different banks that have different cutoff points, but at a certain point, it becomes very difficult to get a loan. And I think that's one of the reasons a lot of people had short sales or foreclosures in the past, and now their credit score is so low that they would have to go to people like Mark and get hard money loans at a higher interest rate until they spend a year or two clarifying and clearing up their credit scores.
Okay, and what kind of interest rates have you seen the credit scores get affected? You know what I mean? Like if you have a score of 750, it's this interest rate. If you have a 650 score, it's that interest rate.
It usually is in a narrow band as long as your credit score is somewhere in the mid to high 600s or higher. And if it's say below 660 or 640, then it becomes more difficult. It could result in a difference of a 0.25% in an interest rate, as long as it's high enough to
Right.
it could be significant.
Now, at what score could you expect to be denied?
If it's in the say below mid 600s, you might be denied being able to get a loan. It also depends what the reason for the low credit score is. Is it that there was a foreclosure or a short sale, or is it overextending on credit? And you really have to look at it. And also, when people go to mycreditscore.com and get their own credit report, it's not the same as we get when we look at a credit report for.
It's not a true FICO score.
It's a true FICO score, but it's not as involved as the credit reports we get for doing a mortgage.
Oh, okay.
And
Oh,
so
the
I've had people say,
detail
oh, my
that's-
credit score is 700. I go pull it and I say, well, it's, you know, it's in the low 600s, and then.
Oh, it's a big spread.
But if it is, there's ways that we have companies or that can help people repair their credit, and sometimes that can be fairly significant, not take a long time.
Well, and what'll happen, it's kind of interesting, because someone may have a low credit score for some, quote, silly reason. They can't get a loan, a bank loan, and then they're a perfect candidate for you, Mark.
Oh, yeah, for a hard money loan, but
Yeah.
then there's just a huge difference, of course, between the bank loan they were hoping to get and then probably
Sure.
the best rate I could get them.
Yeah, exactly.
Yeah, that's the big
Okay.
thing,
Yeah.
Robert, you're quite the guru for mortgages. Because you are a mortgage broker, people can refinance their homes with you, et cetera. How do people get hold of you?
I'm at RPM Mortgage. You can check out our website. We're a very large private mortgage bank located headquarters in the Bay Area. You can call me on my cell phone, which is always available at 415-515-1941. Or again, you can get to me through checking out the website for the Best of Investing.
Very good. Okay, we're going to cut to our third and final trivia question break. And here is the question. And this is a little bit more of kind of dumb sports injuries. Which Washington Redskins quarterback sprained his neck when he celebrated by ramming his head into a padded cement wall? He scored a touchdown. It was kind of a hard play, as I remember. And he smashed his head against the padded wall and sprained his neck. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Check them out. The weather's still great out there. Call 888-912-1190. That's 888-912-1190 to answer this question. Which Washington Redskins quarterback sprained his neck when he celebrated by ramming his head into a padded cement wall? I've done that before. That's so fun. Make sure to include your name, email address. Hello? Oh, yes, I'm sorry. I'm still reeling from the cement wall. Okay, email address, and remember to speak slowly and spell out your information for us, please. One letter at a time, and we'll be right back. I'm telling you, it should be illegal to have this much fun.
Nice. Gus
What
Farad.
is his
That's
name?
right.
Who?
Gus
Very
Farad?
good.
Oh,
Gus
I
Farad.
didn't know that.
Oh, I thought
But
it
you
was.
won like about a
Gus
year's worth of
Farad.
vacations
Oh
at
my
the
God.
I
I thought it was the guy who's the announcer who just, what's his name? Was it Redskins?
Joe Theismann?
Yeah, Theismann.
Yeah.
That was the
was
the
the
wicked
Lawrence
ankle
Taylor.
break.
Yeah.
Huh?
Whoa.
Oh, yeah.
That was,
Five-
was that on
five-
that was
yeah.
on Monday Night Football, wasn't it?
Yeah, that's what
Yeah.
Special Lawrence
And they
Taylor's
showed it
going like that.
over and over and
They didn't
over.
show.
I
They didn't
wanted
show
to
the.
get-
They didn't show the bone sticking out though. It was compound fracture.
Yeah, I think he's like relegated to college football now. Joe Theismann.
Is he really?
He's off the NFL.
Aw.
Why? What happened?
I don't know. He was doing like the Sunday night broadcast. And
Oh, he was the worst.
Yeah,
he just-
He
yeah, he didn't
would
quite
come
have it.
on and I would have to go to mute and turn on the radio.
Problem with turning on the radio is usually like faster than, or a couple seconds before, and so
Right.
there's the whole disconnect.
It is.
That's the
It's
problem with
interesting.
baseball.
I love those guys.
Yeah,
but you
well,
can't
listen,
do
Sometimes
it.
you can hear it in the.
Yeah.
It's so funny. Yeah.
So
you
what you
hear-
have to, yeah, you have to sort of.
Swung on, hit deep. You know?
Well, if you watch the CSNB,
Yeah.
whatever it is, the Comcast channel, then it's beautiful.
But they're not hooked
Oh.
up with the radio, no. They're still.
but still,
big
yeah,
There's
difference.
7 second delay.
Yeah.
Yeah.
Easily.
Yeah.
Yeah, 7 seconds is a lot in baseball.
Yeah.
That's true.
That's what people don't listen to in the stadium.
And I even have
I know if you wanna read
one of
this
my
one,
TVs
too.
is not through the box, it's just plugged in, and
Get
it's
this.
just about 3-second delay between those two.
Oh, jeez, yeah,
Okay.
That's a quote from Gas Buddy today. If you want to read that one.
yeah. Gas Buddy?
Gas Buddy. They track all the gas rates around the country.
No, I'll let you. Yeah, this is.
I thought you want to do it.
No, this is
The
fine.
American
We can
President.
comment on it, but
Yeah.
it's just-
Everyone's good at commenting.
Yeah.
I like that FICO score thing, because that actually, it's, I've had more than a few people call me and say, oh, I've got an 860 FICO, I'll send it to you. And then I pull their credit and it's 650.
Yeah, yeah, so it's real different.
It's just nonsense, and that's why I thought it was a non-FICO score, that it was, and when you read
Well,
it, you
it's
read,
fair-
our
it's fair-
score
it's
is
fair
not.
Isaacs, but just like you can get a credit report, the FICO score for when you're gonna, rental property, and it's
Yeah.
just not as detailed at all, they look at a different set of criteria.
Billy Fair, Isaac, local resident. When he went to SI in the city,
Really?
my grandfather taught him.
Billy Fair?
Wow.
Yeah.
Wow.
Is he like a multi-millionaire?
Oh yeah, they very well. I think she just passed away. Big house up in Kimberlins.
Yeah, get him as a client.
Okay, the last segment was,
That was a lot of-
a little long, so, this one's only
Gonna be a
over
short
7
one.
minutes. Yeah, this will be a short one. So, when I come back, let's say any other exciting news you wanna bring.
You had some real estate stuff?
I got this one right here, which is kind of a nice report on the
Oh.
the value. This is the
No,
value.
no, that's a bummer.
This is the value of rental payments versus mortgage payments.
So
Oh,
you and your, you listening in the radio, look at this chart.
Yeah, exactly. I don't want to. I mean,
Yeah, exactly.
The
Okay.
chart to show you people.
Okay, yeah, we'll wait 30 seconds while you look at the chart.
Yeah.
Mhm.
No, I just.
No,
I'll
we
say it.
should,
So
yeah.
what's saying there is,
That's
if
the
you look,
crossover.
Here, show it to the camera now.
yeah.
Can you focus in on that?
Just
Got it.
the monthly cost of renting versus owning.
Right. So how do you know real estate's overvalued, and that's the bubble? So I don't want to say that. I don't want to say
Can you
it's.
take a look at that?
Yeah.
So right now,
See?
renting is much higher than owning.
Correct. That's the way it
If I'm
should
reading
be.
that
It should
correctly.
always renting should be always more than owning.
Renting.
It should be this
should be.
Yeah, it shouldn't be this high right now.
Yeah.
But on average, it should be.
I
You
would
show you
think-
make a
I would
profit.
think that rent should be less than owning.
Yeah.
Yeah. Rent
No,
should
to be
be.
if you're a real estate investor, do you want to make
Oh,
money?
oh,
I
I
mean, for owning your house.
For owning your house, yeah. For owning your house, yeah.
But
because
in the
argument
last
for
year,
buying.
yeah, in
Right.
the last year and a half, I've had clients who have said, okay, my credit's cleared up, I'm ready to buy, I've been renting, the rent is going up now, and they put down 20%, and they end up such that their monthly payment, owning the house with taxes and insurance, is less than the rent was.
That's it, yeah. That's-
I
If
could
they
rent
can
the house,
qualify.
the house that I'm in right now, renting, I could own for less than my monthly rental.
Is it now? Would
Do you want a hard
to
money
do that?
lender?
Not really, I don't really wanna.
You don't own that one.
And as a hard money lender, I could find someone who would loan me money at hard money rates, and it'd be a lot higher.
Yeah.
So
But you're
I'm not just
2.5
buying
years,
it.
you got, what, 6 months?
I got 6 months to go. And
What are you gonna do
I'll be,
after that?
Buy a house.
Oh.
Bottom.
Oh, okay.
Hopefully.
Do you already have it lined up? Which one you're gonna buy?
No.
6 months to go.
What price range?
I had a
Credit
foreclosure.
clear up.
Oh, okay.
Yeah, so.
What
There's-
price range you looking at?
900.
How you can get a lot of night?
Oh, there's
That's a lot
$1
of
million
houses,
could
a lot
buy
of-
you beautiful properties in
Yeah.
Nevada right now.
Then
Oh my
I had
gosh.
there's an advisor down here, I won't say his name, but he borrowed money from a client to keep up with his payments. And when you do that in our industry,
Gone.
they cut you off. They kicked him out, and
That was in the paper, I think.
I think it was in the paper, yeah. So
Yeah.
it was sad. He said the investor called another LPL advisor because he always saw him in El Davide drinking wine every afternoon. And it really pissed him off. He's like, you owe me money and you're not working, you're drinking. So he called up this other advisor. The advisor said, I gotta turn him in. They turn you in, and they don't slap the cuffs on you, but they basically chop your
Yeah.
body
Yeah,
out.
Well,
that
get your
did
license
show
taken
a
away from you.
modicum of lack of sensibility.
Yeah, totally. No,
Let's
it's
see
really.
that chart again. And then
If
I
you're
guess
gonna
we'll come
drink,
back on.
don't do it in the same town. Put a disguise on and go 3 towns
Yeah.
away.
Right.
That's the moral of that story.
Not with
Yeah.
the guy you borrowed the money from.
Yeah.
So the point of this chart is going back to 1988, this is the largest gap in this index between the
Renting
cost
and
of
owning.
renting
almost-
versus
Does that mean
owning.
that
It's
people
almost the
who
only
own-
time where it was more
people who
beneficial
own
to
real
own.
estate, to
It's
like
almost the only
apartments and stuff
time.
like that, or
There's-
is it
Yeah.
for
there's
trouble?
never a
No,
time
no.
this
So what
was
that means
higher.
is it's
Is
right
that
now.
national, JP
there's-
Morgan? That's
That's
supposed to be
JP National.
national.
So
National Association of Realtors.
the cost of owning is less than renting for the first time since.
Yeah, almost
what?
ever.
Well,
Almost.
since this is the biggest gap ever. They've been tracking
Well,
it.
this
but,
was never higher, almost.
Right, so since-
Almost.
Well,
yeah,
there's
since-
been a
since
couple of
Yeah,
ups
but,
and
but then
downs.
people,
There's a couple
what I'm
of
thinking, what I'm
ups.
saying on that though is that, okay, that means everyone who rents is now gonna start owning, and then all those
There-
rentals
there
will
in
come up
94 it
vacancies.
went down.
right, but
Yeah.
look at Sarah. We
But
talked
yeah,
about it the
and
last
then
show I was
here
on. I mean, look at the
in
price of real
03,
estate.
I mean,
So
it's
For
like
a
how-
short
because the
period
rental
of
rates
time.
are so
It's already
that's
been-
what-
it's
rental
already
rates are
been,
how you price the
what, a
value
year
of
and a
real
half.
estate.
Yeah, right.
Everyone thinks
Longer
it's
than
with
a
the
year.
marketable
This
bearer,
is,
buyers and sellers.
there's only
Really, it's like what can you rent that house for?
30% difference.
Yeah.
That's the max price of that,
40%.
of the cost of owning. If you own it outright, it's a whole different story. But if you run a mortgage, an 80-20 mortgage on it, what's it cost?
Well, this 540 to 720 is like a 40%.
But that number, obviously the Bay Area, certainly not Marin,
No.
probably.
Okay, look how patient Kramer is.
Sorry.
You're such a patient guy.
All right, yeah, let's go.
Okay, you guys ready? 'Cause you have to go too.
So are we going with?
Yeah, we'll go, I'll say, Lou's got some interesting real estate that.
Sorry.
You keep catching flies?
Same one.
Same
Turn.
fly.
I never get 'em.
You never catch that fly.
No.
Get some orange oil.
Okay, here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hahn, Robert Chip, and Lou Botmal. When we got to the third and final trivia question break commercial, we asked this question. Which Washington Redskins quarterback sprained his neck when he celebrated by ramming his head into a padded cement wall? And Lou, you happen to know all these answers. Go ahead.
It was Gus Frerotte.
Gus Frerotte. That is
Yes.
correct. Very good. And you have some kind of very, very interesting real estate statistics for us.
Well, you know, in the Bay Area, it is a different real estate market. I want to say that because it's our broadcast area, and there is a national tracking. You know, besides Case-Shiller and other indexes, there's actually one that J.P. Morgan does. It's really interesting, and it really, in my opinion, tracks the value of real estate. What we need to understand is how much my real estate really worth, and the true answer is, from an investment standpoint, it's whatever you can rent your real estate for versus your holding cost. You have a traditional 80-20 mortgage. What's that cost you plus taxes, plus upkeep, plus insurance? So to measure that gap, J.P. Morgan takes what's the average rental rate across the nation versus the home mortgage rate across the nation. And I'll say this, let's go back to a bad number. In 2006, okay, it was about $950 on average a month to own your home. To rent your same home, it was probably about $590. Okay.
This must be like some cornfield in Iowa. But
No,
go ahead.
but no, I mean, this is based on averages. So think of it like
No,
if
it's per week.
Yeah, no, you probably you could average it on maybe like $100,000 mortgage. Remember, average
Okay.
mortgages across the country are much lower than they are here.
Sure.
So these are a way of quantifying the numbers. Now, currently, we're at the biggest gap we've seen in almost 20 years. Where on average, you can rent a home for $719 a month, and your average holding cost is $536.
And $700 for renting isn't a huge amount.
No.
But in comparison, the owning of the homes, because the prices have gone down and the rates have come down.
Correct.
So that's saying that if you have a house, you would pay less owning it than you would if you had to rent it.
Are you
Absolutely.
considering the real estate tax breaks too, or?
Yeah, that taxes depreciation on investors or the home mortgage deduction.
Okay, I
Yeah.
wonder what tax bracket they're considering.
Pretty low.
And I guess
this
the
is-
interest rate factors into that, right? Because,
Yeah.
because I'm looking, we were looking at that graph off the air, which of course our radio audience cannot see, but the graph shows literally the biggest gap in favor of home ownership going back 20 years. And I think it's, you know, kind of obvious. I mean, rents have gone up like crazy everywhere, and yet the cost of home ownership right now, I mean, if you could buy a home, right, you can get a great interest rate and great pricing.
And
Right.
that's strictly a supply and demand with the renting, isn't it?
It's
I mean,
supply and demand with the renting. A lot of the people that are renting were homeowners who put
Lost their
nothing
homes.
down, lost their homes, and so there's a higher demand for rental property, and fewer people can qualify to buy.
Robert's more of an expert on this than I am, but I think these are mortgages that average under the $417,000 threshold.
Yes.
Yeah.
So
yes.
those are really the low rates. If you have a high, like we talked about FICO score, if you have a really good FICO score and you're refinancing under 417, you can get a great deal right now, right, Robert?
Or
No,
3%
it's just unbelievable. You
Yeah.
get a 30-year fixed mortgage for 3.5% with no points.
Did it go down again this week?
Well, the 10 years at a buck and a half.
Buck and a half.
Yes,
I mean,
and there's not a lot of indication that it's heading upward, especially this
No.
year. It's not in an election year.
No,
and-
unemployment's
and
still
probably
high.
not even after that.
Well, it's scary to look, you know, from my world. I know it's a little different than yours, but both the interest rate and the euro have dropped about the same amount this year. They're down about 8%.
Yes.
Yeah, if you look at the pure yield, I'm not talking about the value of the bonds, but just the yield, how it's dropped so much from 1.75 to 1.50. Then you have the euros down to $1.22 right now.
Well, partly,
No confidence.
for the United States, there's not too much else out there that's safe to invest, and so that's why a lot of money's coming in to dollars, right?
Yeah, where else are you gonna go? You're not
Exactly.
gonna buy Syrian bonds right now. That's for sure.
Yeah.
Sorry.
It's like when I took a plane, they said, yeah, we're gonna do a stopover in Beirut. No, I don't think so. Okay. Anything else, Mark?
Well, no, I'm just amazed that the mortgage rates keep dropping, and you know, everyone I know who's in the mortgage loan business right now, all they're doing is refis,
Right.
and it's interesting that, you know, the home sales have really tightened up, most recently, because there's the inventory, the banks aren't releasing as much inventory, we've talked about that quite a bit in previous weeks, there's not a lot of new foreclosure or REO inventory hitting the market, and in terms of, you know, retail sales, so many people are underwater that they just can't put their home on the market and sell it right now. So it's really, it's an interesting, interesting market we're in right now.
Well, oddly enough, I think the percentage of sales that are short sales has decreased recently, so that, I don't know if people are now above water and able to get out, or, but there's more people just selling their homes who had equity, but there's, the amount of foreclosure sales and short sales is not as great as it was a year or two ago.
Well, although.
Which is a healthy sign.
We had a guest though, it was last week, that was telling us that he thought short sales were going to actually increase, that banks were starting to make it, that the process of short selling streamlined. So again, you know, those of us who are real estate investors are hoping that that's true, because we would really like to see more inventory on the market.
With Kamala Harris's new money that she's got for California, that now the banks in California can't foreclose if the people are applying for modifications. So that
Oh,
would
that's
slow
right,
down
that
the
just came
process
out.
even
A lot of
more.
new regulations,
All right.
a lot of things
Yeah.
up even more.
You guys ready?
Stay
Okay.
tuned.
Okay. Thoughts for the day. Remember, dyslexic learners are teeple poo. Don't forget. And life is not measured by the number of breaths we take, but by the moments that take our breath away. Oh, brother, who wrote that savvy thought? No, just kidding. I like that. That actually sounds.
That is nice.
That sounds like something the Wizard of Oz would have told the Tin Man.
A Zen moment on Best of Investing.
That's right. And with that, tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.